A new week is here and everything indicates it will be a red week. Will it be another 3% like Nasdaq fell last week, or will it be more? You're listening to the StockInvest.us podcast for week 34. During the podcast I will tell you what I think will happen this week, what are the things to look out for, what are the technical indicators saying, where are we heading. Of course, by the end of the podcast you will have the trading tips, and the trading tips last week, well, they did like I hoped. They were safe, market went down, but going for Lockheed Martin was one of the good tips against Gility as well. But Zomedica was sold at stop loss, giving 34% profit. This week I think I want to go back into Zomedica again. Currently trading around 26 cents. I believe that might just be a good option for the week ahead of us. More will follow, you just have to stay tuned. First, and as always, we'll have to listen to the disclaimer, then I will be back.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
As I said, a new week is here, and with a new week comes a few changes to the podcast. In this week's podcast, I will not do the analysis of Microsoft, Apple, Tesla, Bitcoin and Dogecoin, which I've been doing for a very long time. As I told you last week, I am slowly changing the podcast concept. We will instead focus a little bit more about the trades. But let's rewind 1 week back. Last week I told you I thought it would be a red week. I gave you the reasoning for this. Like I always do, I told you that the buy and sell signals were extremely high, especially the buy signals for the different markets. Nasdaq was up at 47%, and as I told you last time it was this high, it was a reaction. And the reaction came, but it was not a major one. It was more, like I said, I thought it would be some more sideways movements in the market. And by the end of it, it would end red, but not by much. Now we know the answers. They are here. Dow Jones went more or less total sideways, had a fall of 0.16%, so not much for Dow Jones. Nasdaq, however, fell 2.62%, and some stocks fell much more. There were a few bright spots during the week. Bed and Beyond had a rally for those who were able to get in and out at the correct levels there. It was an amazing opportunity. Personally, I was not in Bed and Beyond, but it's still nice to see these rallies. I was into more secure stocks because, as I told you, I thought it would be a red week and I wanted less exposure to risk. Of course, you have to take some risk, but that's the general idea. And that is also why I try to give you the fundamental insights, the technical insights, and try to tell you what I think will happen during the week, because that will determine also the action that I will do during the week. And one of the tips last week was to keep on to Chevron, and Chevron paid dividend, which is very nice indeed. But we will look at the week ahead of us and what are the things to look out for. We have been into quarter season for some time. We are getting to the end of the quarter results. There will be some quarter results this week as well, but nothing really heavy. You should check it out if you are a quarter season trader or if you are in stocks which may have quarter results, because we often see huge changes in relation to the quarter results. So don't get caught by surprise sitting in a stock just to see huge movements either way up or down just due to quarter results. Do your due diligence, check out your company, when will the quarter results be, so you can either adjust your portfolio or at least be aware of possible action. Because it is like this in the trading world. You have technical analysis and you have fundamental analysis. Technical analysis just tell you what, based on previous history, can you expect from the week, but it cannot take into account fundamental news in the same degrees. And for sure not those who are totally unexpected. That is why we like to focus a little bit on fundamental news, have a look what are the things that can affect the market, and then we look at the fundamental picture to try come up with a conclusion. And as I said, there is the end of the quarter result season, so there are not so many of these heavyweighters coming with quarter results. Then we are left with the job numbers on Thursday, and for the week ahead, as such, it will be relatively slow. We are again heading for new increase in interest rates, but the market already expects this, so there is no really new thing to this. The slight attention now is towards inflation numbers. Will they do like in previous month, continue a little bit down, or will they remain high? That, of course, you will get an answer to, but if we look at the fundamental picture, what are these major things that I believe can have an effect on the market? I told you, and I prepared you for a very long time, we are heading for fall, and it will be very hard on energy for the winter ahead of us. And now you see slight messages in the newspaper, journalists and some politicians are starting to play around the energy, because the energy prices are jumping while they're up and down, and some days they are just setting new records by records, even in a energy producing country like Norway. So now you will see the focus on energy, and we know that energy is a huge part of inflation. So I think slowly people will start to realize that inflation will not go down, it will continue upwards. Yes, they have a lot of unsold clothes which they are going to push out to the consumers. There are some more money being printed in the United States. There are a few things that can give some short-term reactions, things are coming out for sale. But with high energy prices and the expectation of even higher energy prices, and in addition to this, you have different logistic issues again popping up around the world. Just to mention two of them, if you follow the news, you know that there has been very, very dry weather in Europe, meaning that some of the major rivers don't have enough water to continue transport on the river. They have to move it onto the roads, and that caused some disruption in logistics. In addition to this, China is also shutting down different parts of China due to lack of energy and energy crisis in general, and this will again give disruptions. And you have many small things. I like to follow the Norwegian market, being Norwegian, and I'm very proud about a company called REC Renewable. It's solar energy, and they say they'll have to shut down production due to the high energy prices. So there is a lot of things that just comes up as small messages, but when accumulated you can see that these will have an effect. So I think just to wrap up that part, that we slowly will have more acceptance that the inflation is not over. Only way to fight inflation is increasing interest rates, and they might do it harder than they already have done, trying to be ahead, and that will not be good news for the stock markets. Of course, there is the Ukraine war, and there is the upcoming of the Taiwan conflict. You have to keep an eye on these things, and especially if you see some sort of changes that can cause drastic changes, either that for instance Russia starts to use more heavy weapons, or there are changes to the war in general that suddenly can start to hit the mainstream media in much bigger degree than it already is, because now we are somewhat tired of the Ukraine conflict. It's not that much in the news, but when and if it starts to hit the news again, it will also affect the market. It's just how mentality works. Taiwan conflict, of course, if that starts to escalate, it will be the hammer for the stock markets. I'm pretty sure about that. But we are in a situation, just to sum up also that part, we are in a situation where the market has been falling and falling and falling. And as I showed you last week in last week's podcast, the long-term trend is negative, but the short-term trend is slowly going up. It's at the top of the trend. There is a fair chance that we might have a break of the falling long-term trend, but we need it confirmed. Like I did last week, we are in the top of the short-term trend, meaning that there is natural to have a reaction. So last week's reaction was totally natural. What happened this week will, to some extent, give us an idea if we just will continue within that strong falling long-term trend, or if there is a chance that we will turn above previous low, which for Nasdaq was 10,600 points. If we will turn above that level and slowly build momentum for a trend change, a trend break. So it's a very interesting week in many ways. Or if we just continue down, because things may suddenly go from bad to very worse. Many have already forgotten the pain for the months of red weeks. We might just get back to that. There's a higher chance for that than that we are going up. We like to look at some indicators I mentioned a week after week. Oil is one of them, and the oil price is up $2 last week to 90. It's still under the 120, which it was traded some week ago. I think oil will just continue up. We are just in a temporary low, and maybe we just now will see increase more or less day by day for the oil price. My guess and prediction is that oil actually might go all the way up to 200 on a peak in the winter. If oil go up, it means two things, and here come a small lesson. If we believe, like I do, that oil will go up, you invest into oil stocks like I have. I told you when the oil was 20, just buy for what you can, because as oil price go up, oil companies will make money. They were hammered from 2008 and onwards, and low oil prices the last few years, and now they are back on track where they deliver profits like almost never seen before. So if you believe, like I do, that oil will go up, well, that's one of the places that you want to have a small portion of your portfolio, because if markets go down, doesn't mean that all stocks have to go down. Some will do very well or fall less. And that is lesson number 2, that you cannot win them all. You cannot be in every stock that is going up, so you have to expect also to be in some stocks that will go with a loss. It should be a part of your understanding how things work, that you may, let's say if you buy 5 stocks, you can expect at least 2-3 of them to go down, but you don't want them to be these heavy fallers. So what you do is, of course, you use things like stop loss, and you also reduce the risk by going into stocks that is not that volatile, or like I wanted to say also here, that if they are correlating with something that is going in the opposite direction. So if oil is going up, and we know that oil stocks correlate to oil, kind of natural, there is a fair chance that the oil stocks, even if market starts to fall hard, will do somewhat okay. May fall, but not as much as, for instance, tech stocks. So it's a way of thinking. In the other hand, if you're lucky and market just continue up and oil remain high, these stocks will still be attractive, and by that way you get into something what is called risk reward. And the risk reward is somewhat attractive for the oil stocks as is. $90 this week. I think it will continue upwards. It's up 2.2% since last week. We also follow gold, simply because gold measures a little bit how money flows, and gold fell by $60 last week to $1,735. I believe, like oil, that gold also will go up. I have a target for 2,500 dollars for gold. Will it happen? Who knows? I use gold as an instrument against inflation. Also the physical gold, so that's said. And as I told you over and over and again, if the 10-year treasury will go up, that's usually bad for the market. Last week 10-year treasury yield moved up to 298, up almost 6%. As we know, market fell. I think that you will see the 10-year treasury just continue upwards because they have to fight inflation, increasing interest rates. And a few of you might be a little confused because now you read a lot of different messages in the news. Some say that interest rate will go down because we will have a situation, a recession, which will cause interest rates to be pushed down to try restart the economy. That is true, but before that we can have interest rate rally just where they have to try to fight inflation. So as prices go up, and I think that they will explode during late fall now due to energy, especially driven by energy and logistics, which I've spent some time today trying to explain to you. They have to increase the interest rates. So I think that we will head for interest rally. Been saying this many times. When the banks etc. said it will not go very fast, I told you it will be double and triple jumps on each of the meetings, and everything indicate that they also will continue for some while. So before we are getting to the situation where they start to reduce the interest rates, in my opinion, we will have a short-term rally. Interest rates go up, economy starts to go down, it's already shrinking. Of course, you hear Biden say that there is a new definition of inflation. Now there is no new definition, of recession, but there is no new definition of recession. Recession is coming, is just embrace for it, play with it, use it to your advantage. Is coming, and you just have to figure out how to play that, which stocks will do good in the recession. Where do you want to be? Do you want to be in oil stocks that keep paying huge dividend, or other food related stocks, because we know food also do somewhat okay in these periods. But when the recession is here, I don't know, it will be 2023, that the recession is already here, but that it will be so strong, then we start to get to the point where they reduce the interest rates simply to revitalize the economy again. It might be around, my current guess is just it will be in, let's say, the middle of 2023, so we are maybe as much as a year away from that scenario. Until then, my prediction is that it will continue upwards. Much talk about different things. We will look at the technical picture, we will look at the chart, we will look at signals, the conclusion, because we will try to come to a conclusion. What will the week be like? From the fundamental point, there is no really heavy things moving this week. In my opinion, it is three things. It is the heat, which currently is here because that gives focus to the climate thing, and the climate thing makes politicians do a lot of decisions. And there might come things up that can affect market both ways, especially electrical vehicles is a tip to look into. Then there is the Ukraine conflict, and of course possible escalation in the Taiwan conflict. These are the things that I currently see can affect the week if they start to pop up some news. The technical picture, trying to time the week ahead of us. What does that show? Well, it shows us that last week there were extreme high amount of buy signals. For all the stocks that we analyzed that is qualified for these signals, last week was 44% buy signals. Last week was down for many markets. That made the signals fall to 29, but that is still high. And this signal works like this. When they go down to, let's say, from 44 to 29 like they have now, that doesn't mean that there is an obvious buy, because you have to get down to the 14, I would say around 14-15% buy signals, then it's like an obvious buy. Now we are just at what can be called a downwards trend. Nasdaq, 27% buy signals, fell very hard from last week, but it was 47% buy sales, but it's still high. It is not giving any indication that this will just turn where it is. London, 25% buy signals, and New York Stock Exchange, 25% buy signals, and Tokyo 41, and Shenzhen, China 40. So it is very high still across the world. So none of them are giving the idea that market will turn. But let us quickly look at the chart. And if you're listening to this podcast on Anchor, Spotify, or wherever you are, this podcast is also available on YouTube, where you will see some of the things that I present. We had a golden cross back 3 weeks ago, just before I left for holidays, and it really turned out very well. Nasdaq moved up from 11,500 about to above 13,000, so the signal was very strong. It was accompanied by also a golden cross from a general golden cross from the relation between the moving averages. So far it's doing exactly what it should be. Last week it hit the top of the trend, it got overbought on the relative strength index. All these indicates that it should go down. Looking at the chart, in my world, having studied thousands of charts, what the chart is telling me that we are still on a reaction downwards, and that usually if we are to break up, it should turn in the middle of the trend. If it turns in the middle of the trend, it means somewhere around 12,200 points, meaning that it still can go down some 500 points for Nasdaq before it turns. That will be total natural. There is no dramatics in it at all. At the same time, being at the top of the trend can be, as it has done before, did this back in early June, go from the top of the trend to the bottom of the trend in one straight run, or let's call it fall. And if that happens, it should go down all the way to 11,700 points. So we are in a situation where the best case is it falls to the middle of the trend, the worst case where it falls to the bottom of the trend. If it falls to the bottom of the trend, you can start to again speculate if it will break the trend and fall down, but we are not there, and I don't see that happening this week. I think, looking at the chart, we will have a fall. It might come in the first part of the week, meaning the first few days, then get back to green by the end of the week. Or it will just be slow down during all week. I see two scenarios. I already described them. It's either falling to the middle of the trend or to the bottom of the trend. It will be one of them, in my opinion. I also think that by the end of the week, it's not been able to get back to green. It may have given an attempt or two to do that, but that it will turn or be below today's price. My very best guess for the week ahead is that we will have more volatility than we had last week, meaning more up and down. Especially intraday, you can start the day minus 2%, go back to green, and end in red. So it will be nice week if you are a trader. For sure, this is what us traders like. We like volatility when things move. You just have to try to time your trading and get in when things are low and things are very red, and then you buy and sell on the green days. 12,200 will be my tips for the week. That we will continue the fall from last week. It will be yet another red week, and that it will be more volatile. After that, I am totally unsure. I'm starting to get somewhat positive if it just managed to keep the momentum. I like that the volume also fell last week along with the index. It's such a good sign. We want to see these things. We don't need much before we are in a very different situation that we have been in all winter with endless fall. There are things that might just tell us that we are for a longer change, not only just for a week. With that conclusion, we will head for the trending tips. As I told you, there will be no analysis of Microsoft, Tesla, Apple, etc. We will instead look at what can we do, what can we trade this week, spend a little longer time there. It will be some 10 minutes or something in the next section. So trading tips is the next. Last week I gave you 3 candidates. We discussed Chevron and we discussed Sumerica. And as I told you, I was in Sumerica. I was up more than 60% in Sumerica. And as I told you, I would put a stop loss on 30 cents. I didn't give Sumerica like a buy candidate last week, only if it fell between 30-34 cents. It could be very attractive. I did, just like I said, I put, because I was running, if you're a new listener, just let's rewind very quickly. Week 21, I bought Sumerica at 22 cents, because I've been trading Sumerica before, and I told you I thought this will do very good. It was one of the few stocks during all these podcasts which I haven't made, put on a trailing stop loss, because I said I thought it will go to 30 minimum, and after 30 I would consider. That happened, it went all up to 38, maybe it was even 40 cents as well. And last week I told you I would put a trailing stop loss on 30 because that will secure me a huge profit anyway, because you don't know how these penny stocks move. Last week became a red week and Sumerica was no exception. It fell quite hard. It fell under 30 cents and my stock was cut by stop loss at 30 cents, giving me 34.53% profit. I tried to explain last week. Some of you may ask, why didn't you sell it at 40? You could have much more profit. You never know. The stock could have gone much higher. They presented their quarter results, not bad at all. It's just a penny stock and these things can move much faster either way than you think. So for me, I was extremely happy securing 30% profit. I didn't want to be too greedy, and at the same time I wanted the option if it continued up. Sold is 34 cents, and then what I said last week, if it falls to 30-34, it might be a good buy in my opinion. And if it's cut by, I also told you, if it's cut by stop loss and falls further down, I will consider to rebuy it. And that brings us straight to the very first trading tips of the week. Sumerica. I think there is money to be made in Sumerica. It's currently trading around 26 cents. I will be back in Sumerica. I think it will continue upwards. I think we are heading for $1. It's just a matter of time before we will go up there. I will not put a trailing stop loss on this trade simply because I expect it to move very much. It will just be a small amount, and if you for some reason choose to follow what I say, do the same thing. These money, you cannot be dependent on them, and by all means do not use leverage or other thing, because this is very volatile stock. There is no guarantees about anything. What I can tell you is that they have plenty of money in the bank. There is no chance they will go bankrupt anytime soon, and they are on an upturn in terms of the products that they develop. So there are some fundamental nice stuff. I think the price is very nice at the current level, so I don't see that huge risk in the general, but it's still a penny stock and you never know exactly how penny stocks will move, other than that they usually move very fast up and down, and percentages can become very huge, and you don't want to sit on the leverage if things go south or the wrong way. Sumerica, first trading tip, try to pick it up where it is today. If you are able to get it around 26, I think that will give you some nice percentages. The other stock, which also was kept from week 30, was Chevron. I bought Chevron at $139. Was not able to, it was not cut by stop loss because it has just continued upwards. And it was the same case last week. Even give a little dividend. It was $1 something in dividend last week, 1%. Very nice. Get that into your bank account in addition to the gain. Currently trading 157.69, up 13%. Is Chevron still a buy? Yes, I think Chevron still is a buy, but you will not maybe have the same return like I had for the week. The three new trading tips last week was Agility, Mercury General Corporation, and Lockheed Martin. I got in at Agility at 1672. I was hoping to get in lower, but the stock just continued up. I just had to make a decision, so I just got in. And lucky me, because it on the same Monday it just continued up. It was more than $18. Hit a high and then started to fall a little bit for the rest of the week. Was cut by my 5% stop loss, giving me 407% return. Do I think Agility Inc. is a possible buy at current level? Yes, I think so. So far, we have Zomedica, Chevron, Agility as possible buys for this week. Mercury General Corporation was also bought last week. 33.25 was bought half an hour or something like that after the markets opened. Just continue upwards this week. Was not able to be cut by stop losses, up 3.25%. And I think it is one of these stocks that can hold good even in the red market. May even go up during the week, but I don't expect very much. The last company was Lockheed Martin, was bought at 434, just continued up. It was up at 445 or 458. 448 at high. Fell a little back, ending the week at 440, up 1.39% for me last week. So last week's three trading tips, Nasdaq went down 2.64%. These three trading tips went all in the green. Agility up 4%, Mercury up 325, and Lockheed Martin up 139. Only Agility was sold by trailing stop loss. Mercury and Lockheed stays still in the portfolio. So what are the trading tips for this week? Well, as I told you, I believe it will be a red week, which means that I will not go into more company than these I'm already in. In addition to, I will rebuy Zomedica. So the trading tips for this week is Zomedica. I think it's a good buy at 26 cents. I think you can do somewhat okay getting into Lockheed Martin. Don't expect huge return. It may hold very well during the week. If you're looking for a high return, well, Lockheed Martin is not for you, because I think it will just be very slow. Could even end the week a little red, I don't know, but I don't think there will be too huge movement. And in general, you want to be in the war industry right now. So speaking a longer term, I just think it will hold very good. Mercury General Corporation, I think that is a fair buy at 34.33, so that is a tip. If you don't are in like I am, I think it might do very good. I also believe that there is possibility to do a retrade in Agility Inc. So I will do that as well, so Agility and keep Chevron, Mercury and Lockheed Martin. So I will be in 5 trades for the week ahead of us for this Monday podcast. I have other stocks as well, but for this trading podcast, that will be it. I will repeat last time. Zomedica, ZOM, Chevron, CVX, Agility, AGTI, Mercury General Corporation, MCY, and Lockheed Martin, LMT. All of these 5 companies, in general, I think will beat the market, not by very much. I think 1 or 2 of them might do quite okay during the week. We will know next week when the answers are in. And I think also, on a final note, on an ending note, I think that during this week there will pop up some very good buying opportunities. I will scan much more, preparing for some tips which I think might do very well next week. We'll see if we can do something called bottom fishing, because markets are falling. Some will fall extra hard, and give an extra nice upside. So I will try to scan for these, prepare for next Monday, so you can have some that may do very good. Until next week, have a good week. If you have any questions, comment on YouTube, send an email or whatever, and I will try answer it either on YouTube in the mail, or I might even bring it here in the podcast, giving you answer to your questions. Until next week, have a very good week. I hope it will be a green week for you, and that you are able to enjoy good summer weather as we are heading into the fall. Until next week, bye.